The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 27th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Let's make sure we have an extraordinary weekend. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic, fabulous, fun day Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading down 22 points at 20,079. S&P is off 4, trading at 2293. NDX 100 up 8 points, trading out at 5165. NASDAQ Composite flat. Russell 2000 down 8 points. Gold is down 2. Silver's up 22 cents. Light Sweet Crude is back about $1. Leading the charge to the upside, Bard CR Inc. up $12 and change. Priceline is up $9. Wynn Resorts is up 8. General Dynamics up 7. To the downside, Novan, N-O-V-N is a ticker symbol, off 77%. Ooh, what the Sam? Heck, must be a pharma company or something, huh? Phase 3 pivotal trial into the toilet out there, along with the stock. Hope nobody out there has any Novan. Google is down $7. Acuity Brands down 7. Air Products down 7. We got the 7s going. Must be Las Vegas in our rear view mirror out here. So let's go ahead now. We've got 4 different requests already. Thank you. Well, one, Brent from Martinez, California, was on the line yesterday as we went into the close. I didn't see it till we were basically signing off. My apology, Brent, for not getting back to you. He wanted to take a look at Chicago Bridge, CBI. So we'll do that in the next segment or so. Dana wanted to take a look at ticker symbol IP. Scott wanted to take a look at Caterpillar. And Mike wants to take a look at TGB. So we're going to look at all of those for each of those individuals and really anything it is that you want as well. But first, the first question actually came in was if I could go over the Dow and re-identify for this listener viewer as to where the Dow is headed to. We'll say likely headed to and the reasons why. So let's take a look at the Dow. So the first thing, remember, if we look at the Dow this way, which is fine, what we know is that the Dow is at new all-time highs. So when we're at new all-time highs out here, there really is nothing on the left side that is going to be a resistance area. When we see swing points, and what we mean by a swing point, we're looking at a major inflection point, a major change in direction out there. Price stopped at that level for some reason. And when price tries to get back above a swing point or below a swing point, we try to identify what's the volume as it is trying to pass that level. Does it have enough volume to get over? The belief is that if you are coming into a swing point with volume, pretty good chance you're going to go ahead and take it out. You've got more buyers on the way up. Likewise, if you have more volume coming into a swing point on the downside, you have more sellers wanting to go ahead and get out. When we have light volume, taking over swing point, which it can be done, then the message kind of gets confusing. However, I do have a theory. I just wish I could put it really to work out here. And the theory is, and I've spent some time on it, I just can't get it to really, I need to be a programmer in order to do this. So maybe our favorite polar bear is listening out here. But, if we take a look at the spot, I'm kind of diverging here. I'm sorry about that, but I just want to get this thought out here. If you take a look at the close of the SPY, for example, today versus the open on Monday, that price move is basically catching up to what's going on in the futures market there. And where that price move is pretty much coming from is really overseas traders, right? Not that there's not people in the U.S. that are trading, but our work hours here basically are what? Whatever they might be, 7 to 4, 7 to 5, something like that, 9 to 5. But, in the overnight hours, not that there aren't trading desks in the U.S. trading because it's a 24-hour market, but we can attribute most of that to overseas markets. So the question becomes, when we come to work here, how much of the, so there's a lot of money, right? We talk about gobs of liquidity. And when we take a look at those, just in my mind, the volume, just hear me out, theoretically. Out here, it's trying to compare that difference between, and we take a look at the SPY, for example, the prior close, the days open, how much of that, and all of that we're going to say is attributed to overseas market versus what's going on inside of the U.S. In any event, back to the Dow out here. So when we are taking a look at stocks being at all-time highs or indexes being at all-time highs, there is no left side resistance. There is no swing point. So earlier in the week when the Dow was taking over the 20,000 level, I said one of the best tools that you and I have is taking a look at our horizontal trading ranges. Now, those of you that are longtime listeners here at TFNN, you'll know that these levels are referred to as primary trading ranges developed by Bud Rolfs out here. Again, the difference between what Bud had done, well, all of his stuff was visual. All of my stuff is electronic. I don't have the time to sit here and really try to figure out if 10,426.77 is the most sought after, the level where during the last 30 years, where that has been found, where price has found its steadiness, its largest number of either opens or closes, which it is, by the way. And then where's that next level? I just have a system that goes ahead and does this. Now, the cool thing about this work is it identifies these longer-term horizontal trading ranges out here, because the markets are basically moving sideways, moving up, or moving down. Sometimes it's both. It's two of those, meaning sideways to up or sideways to down out here. And these levels, they act as such superior areas of support and resistance. Now, it's a monthly chart that we're looking at. The red lines, by the way, are monthly numbers out here. And this just gives you a nice overview to see how when price meanders in between these areas. And oftentimes when you're trying to break through some type of hurdle out here, you don't do it on the first try. Sometimes you got to punch, and then you break the glass ceiling, so to speak. Well, the glass ceiling inside of the Dow, if we're going to rely upon monthly horizontal trading ranges, was never 20,000. But of course, the media type don't really understand this this tool out here. It was really 19,800. So as long as the Dow trades above 19,800 out here, this says that what the Dow wants to head to is 21,675. That is a longer term target for the Dow, and that's based on data going back to 1997. So really 20 years worth of data, right? 20 years worth of data. When we get back, let's go take a look at the Dow. Let's go see what the candlesticks are communicating to you and I. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow's off 23. S&P is off 3 points. So if we take a look at the Dow again, we're just going to stick with the Dow here just to get so the 20,000 level was never really the important level out. Here's the daily chart for the Dow. Now, if we take a look at significant areas of resistance, it was that 19,800 area. If we take a look at the daily chart, now one of the nice things that buyers and sellers do each trading day is they generate signs for us. They generate signals. Sometimes they are bullish or bearish reversal candles, Japanese candlesticks. I only pay attention to basically 14, 15 of them. It's really 7 bullish, 7 bearish, and a couple of neutral to bearish type signals out here. And those are, in essence, what you see on my charts. Now, in the case of the Dow, you can see up at this level here. Let me see. I'll just kind of draw a horizontal line, function 6, right around here. Is a little blue line going across my screen. You can see starting with this little bear sash candle, December 14th, shooting star the next day. Both of these are bearish signals, giving us a indication that this is some tough sledding areas out here. You have a little bit of a gap down. This is back on December 23rd. Out here, you have a little doji candle. Now, doji candles at resistance mean more to me than doji candles anyplace else. What we already know is resistance because of the prior candles out there. Also, that's known as the gravestone doji. They've got dragonfly dojis. They've got this one here happens to be a gravestone doji, meaning that it opened and closed at the bottom of the session out here. Looks like a gravestone, and then it was followed through the very next day, right when you had that nice little bearish engulfing candle. So we can see all along the watchtower. Ooh, name that tune. I gave you the tune. Name the guy that wrote All Along the Watchtower. But in any event out here, bear sash candle on January the 9th out here. So we can see a significant resistance level. It's right around the 19,960-ish area on the daily chart. So we'll go with that 19, what was it, on the horizontal trading range number? What was it? 19, it's just really solidifying the Dow's PTR, primary trading range, horizontal trading range of 19.8. even though this is just a little bit less than that. And then what do we have here, right? And also price below Stevie's red line, right? The oscillator unchanged line. What happens, right? A couple trading sessions ago, you gap up. Now, somehow people have gaps are your friends to the upside and to the downside. Gaps are nothing more than breakouts. They're significant breakouts. Do they get filled? Eventually, price comes back to the breakout area. That's all that means. Will it happen this time? I don't know. And if it does come back into that breakout area, it's really just coming back in that 19,800, 19,000, whatever what's this number here, about 960 in that general range. As long as price stays above that level, the price wants to go up to the next pricing area out there. So that's what the weekly shows. If we take a look at that's the daily chart. If I just simply punch up the weekly chart out here, in the case of the weekly chart, last time the bears showed up, you can see on a weekly basis was the week of January or the weekend of January 3rd out here. Bears engulfing prices above that area. So old resistance should become new support. What happens if price breaks back down below that? Then it was a false breakout until price gets back up above it. But that should hold that support. That's the only information that we have to go on at this stage here. And of course, this is the weekly chart. And in all bodes well, price above even a weekly oscillator unchanged line. If we take a look at the monthly, of course, we are almost going to finish the month. Well, this is the 27th. So early next week is when the monthly, is going to complete. But we already really provided you with the monthly view by taking a look at those horizontal trading ranges. So I know I went maybe slowly there, but I just simply wanted the viewer, listener that wrote in, if I could go through this to truly articulate what the market is communicating to you and I. Many people interpret the way that I present things or the energy that I have to just be this positive up, and I am a positive person, but just like bullish, not looking back. And I want you to know these are not my opinions. Now, that I do have that opinion about myself, but when I share with you what the markets are doing, this is not my opinion. I just simply, you be the jury, you be the judge. I'll just simply be the prosecuting attorney, so to speak, and just lay out the information and the reasons why, and then you can make your decisions from there. These are what I truly believe are the messages of the markets. Just like we're going to take a look at what the message of the markets is for Chicago Bridge. We're going to do that for Brent out here. So let's go take a look at CBI. And now, because I don't know what's going to happen next, no more than anybody else does, right? But and these aren't tea leaves we're reading. These are messages. These are the way that the market communicates to you and I, how it travels, just like you and I, how we travel, throughout life. In the case of the markets, it pays attention to these borders out here. Hey, speaking of borders, I see we got our border guy on the air right now. But in any event, Chicago Bridge, let's get some volume out here. And Chicago Bridge had a huge breakout area. This is one that each of us, we all wish we would have seen, right? Because actually, it's a classic. Actually, let me turn off those horizontal trading, the TAS market profiles. But take a look at this. Remember, gaps are our friends. Gaps in this case here, you talk about wide-ranging bar because you even fill in the gap, so to speak. Trading day of October 28th. Do not think that a gap is a negative element to a stock chart. It's not. It's telling you strength to the upside or strength to the downside. Now, in this case here, the breakout in Chicago Bridge, October 28th, 4.8 million shares. This case here, price came after that little doji out here on the October 31st candle. Price came back, and it came back to the breakout area. You never know whether it's going to come back to the bottom of the gap candle, October 28th, the top of the October 27th candle, or sometimes just into the prior swing point, which sometimes can be just a couple of candle sessions earlier. In this case here, though, you're just simply measuring the volume. Now, the volume was on that pullback was 1.5 million shares versus 4.8 million shares. And then what does it do the very next day? gaps up again. It's a boinger, right? It boings. It's a trampoline off of a level of support. Now, in the case of Chicago Bridge, let's go take a look at one of Stevie's other charts out here. Let's go put this up, see what if it had been moving higher. It completed an A to B equals CD, or it looks like it at least did that, and it was moving higher with less relative energy, right? We see that out here, and price has pulled back. So the question becomes, okay, price has pulled back and pulled back into where? You know, if we first take a look at the swing point now from December 30th, hard to really gauge the volume there, 1.2 million shares. We got to assume it's somewhat light because it's the end of the year. That was being tested with 1.4 million shares, 881 on January 19th, 1 million shares on January 23rd. So it pulls back into a prior swing point and does it also what I would say is with light volume. Moves up for 2 days. Today pulls back. So far, 604,000 shares after going higher with 1.4 and 2.5. It's just repeating the same pattern over and over again. Chicago Bridge, CBI, looks to me like this is going to head upside again. Now, if we take a look at what those TAS profiles are communicating to you and I, if, in fact, CBI gets above 34.75, it's cleared resistance, enough resistance to take you up into the 39.79 level and maybe even beyond. Just depends. Buzz Lightyear would say you do it with more than 1.4 million shares, it's a huge AB equals CD to the upside. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I see the press conference here is breaking up. Trump likes gold, does he not? I don't remember. Were the curtains inside that room gold out there? I don't remember that. But in any event, that's neither here nor there. Let's go take a look at what Dano wanted to look at, which was international paper. IP is the ticker symbol. So when we take a look at this chart here, we can see a couple of different things. One, we can see an A to B equals CD pattern, right? And it looks like this. Your A point is down here on the trading day of June 27th. That's your A point. Your B point out here looks like September 19th. Pulls back into a low on November 3rd. Makes about a 60% retracement. We'll call 0.618. Makes the 1-to-1, A to B equals CD. Price pulls back, just consolidates sideways, gets up to the 1-to-1.272 level. Gaps up, right? Gaps up with some nice volume a couple days ago, 5 million shares out here. And suggested it wants to head to its next level, its next pricing level, its next target level in the lightning bolt tool pattern, which is going to give you about $61. Now, let's come over to Stevie's other chart. Because what we want to determine is, hey, as price has been moving higher, is it doing it with interesting what I have in my ear here, Steve-O. Is it doing it with energy? And in this case here, it is not. Notice how it is moving higher, doing with less relative energy. That's when these diagonal lines show up on Stevie's chart. So we also want to go ahead and take a look at wave counts out here, right? So I just got to figure out where to start the wave to the upside. So it's going to start right here. And this thing, a day ago, made a seventh wave move. Was that a day ago? Yeah, it was a day ago. Yesterday, as was, it looks like it's going to be confirmed today. So now, you do not have a bearish reversal candle. And I don't recall, Dano, if you're in IP, you're looking to get into IP, but it has what we'll call a topping pattern, one where you should see some kind of pullback, potentially. Still has a rising price oscillator. That's the bottom panel out here. And it will continue to rise until it falls below Stevie's red line of 56.11. No bearish reversal signal here. And there is nothing more bullish than a failed bearish pattern. So if the highs from yesterday get taken out, not today, but Monday, Tuesday, Wednesday, whenever, that just tells you super strength inside of this equity. And the gap up had some nice strength in it as well. So I don't recall whether you were looking to get in, but the analysis here is it shows a topping pattern where we should see a pullback. If it can get below 56.11, then we can start taking a look at those profiles out here. Now, brand new profile formed today. That's what shows up on this chart. And there is nothing more bullish than this profile that formed below price action out here. So this is a very strong looking chart out here. In fact, so much so, let's go see what this thing is doing on the monthly basis out here. What else is it doing? Well, how about this? So we talk about prior swing points, and you can see that this is all the whips. This is all the way back up at its highs out here. And so its resistance level, which it's really trying to overtake, somewhere around the 58-ish area. So if this thing can get over 50, well, look, let's look at it like this. The swing point on a monthly basis is February 2015, 51 million shares. You're already at 49 million shares. If international paper takes out that seventh wave, takes out this monthly swing point with volume out here, it's actually a huge monthly A to B equals CD to the upside out here. So that is on international paper. How did I draw the peak D on IP? The one to the downside, that's just the tool that I programmed out here so that I can go to any chart there, Mr. Bill, and just simply select the swing point that I want to use. And, if I wanted to start right here at this level D here and start doing some wave counts, I could do it. Just really click on it and go. So what I'm looking for, where is what's the high swing point or low swing point? I'm just trying to click somewhere just simply to find out where is that swing point that I begin my wave counts from. Let me know if that answered your question. And if not, I'll find another way to answer the question. Visually trying to do this is just taking too much time for me to try to do that. And you know how I love singing in the key of G out there. And speaking of the key of G, we've got some indices that are in the key of G. The S&P is in the key of G out there. And in any event, and there's a couple other indices out here that are in the key of G. So we got to be on close lookout for those to see if those patterns succeed, fail, and so on. So we had another request out here. Mike wanted to take a look at TGB. Now, Mike is in TGB, and Mike is let's do this. So Mike is thinking of taking money off the table and was asking me what I think. Mike, the simplest answer is it is never a bad idea to take money off the table. If you're thinking about taking money off the table, then look no further. You already answered your own question. Take money off of the table. You've got a good profit in it. If you're going to say, I'm going to take money off the table and I want to get back in, where do I get back in? This thing is a nice little rocket ship out here. We've seen gold so far today reject as silver has. Where do I put that chart? Let me see. Let me go. Let me do this here. Let me switch to, maybe I put it in this workspace area. Lord, I have right here. Okay, so here's what, so silver is up above Stevie's red line, this little convergence here. It's very bullish. It's very bullish for price to pull back into that convergence and then use it as a trampoline. And silver has done that. Now, Taseko Mines is not just silver, right? And gold is just tinkering with that red line. I don't care if it's a couple of bucks underneath it on $1,188, priced vehicle out here. I would feel a whole heck of a lot better if it closed above Stevie's red line. It's just, as I say, a couple of bucks away from that. But what the setup here is, in order for mining equities to continue moving higher, is for gold and silver to continue moving higher, and they have rejected significant support levels. Silver more so than gold, but gold not so bad out there. And the GDX the GDX itself is testing something similar, okay, and has an island bottom pattern. Let's not forget that. As price oscillators came down to the zero line, it's just slightly back above it. The setup here inside the GDX looks good. So if you're asking me what are my thoughts about the mining sector and gold and silver, let me answer it this way. What do you see when I pull up this chart? Now, I'm not sure what I'm going to see, but let's go find out. Let's go find out what we see. I guess you shouldn't really ask a question unless you know the answer to it, but I'm pretty sure I know the answer to it. Where is it? Is this it that I want to show? I don't think it was this. This was the monthly chart. Just for something in giggles out here. Let's just take a look at the XAU. Can we do that? Allow me to do that. We'll pull up that indice out here. So here's the monthly chart. Whew. Now, how about this? Monthly chart. Here we've got a nice little bullish monthly reversal signal. We just had a small retracement. On a monthly basis, last month's low was a test of Stevie's red line, right? You get above Stevie's red line, you pull back into it. It's just testing a level of support. That's the monthly chart. Looks muy bueno to me. Let's take a look at the weekly chart out here. If we take a look at the weekly chart for the XAU, take a look at this. Now, we haven't seen this for a long time. You're going to say, how long? I've got to come in here and just add like a bunch of days. Let me put 15,000 days. When you take a look at this chart, see that weekly price oscillator line comes down to the zero line, kisses it, and rejects it and moves higher? Man, on a weekly basis, this thing looks really good. Really good. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we were taking a look at, Mike was asking about TGB, and of course his question there was, he's thinking about taking profits. He's got nice profits. It's never wrong to take profits. Now, when you get to some type of level like that, you have different types of options, right? You can just take your profits. You can get back all your principal, have free shares, let them ride. Take a look at some other entry point out here. What I'm trying to do is really provide you with a bigger view as to what the sector is saying, right? So if the sector is positive, if the underlying instruments that drive it are positive, such as the metals themselves, it just leaves one last component, which is the yen, because of its direct correlation to the direction of gold that really you need out here. But if we just take a look at the mining sector on its own, which we have been doing here, and we're using the XAU as a tool to do this, what we have is a beautiful pattern out here. You've got actually a Gartley, this on a weekly basis, you have a Gartley buy pattern. You see the A to B equals CD inside this on a weekly basis looks like this. It looks like it's a 1 to 1.272. 1 to 1.272 A to B equals CD. So the prerequisite, what you need is a bullish reversal signal. That took place with that little Morningstar pattern out there, not to be confused with the Morningstar song that Spyro Gyra produced out here. And then price gets above the weekly oscillator and change on it. And if we look at the price, it's above zero and rising. Even though last week was a doji, this week is a doji. Dojis don't mean a whole lot to Stevie out here unless you're up at resistance. That means it's got to get all the way back up to the highs out here in the 113 area. But this could be an A to B equals CD to the upside. Hey, we've got Brent on the line. Brent, thanks for calling. Thanks for holding. How are you doing today?
I'm doing well. Thank you, Steve. I heard you do CBI. I appreciate that.
Hey, no problem. But I don't know if I covered for you what you wanted, but I was sorry that I didn't see your call yesterday.
No, it's okay. It was towards the tail end of the show anyways, and I thought I might try to sneak in there at the end, but you were talking about stuff that was more important than what I was calling about, so I'm glad you just finished what you were talking about. And so.
Never. Now, you want to take a look at today because, hey, listeners want to know, what is Brent doing? So you want to take a look at Potash, Intrepid Potash out here, Potash. They want to know what you're doing with it.
I bought this at $1.80 because it got down to that level. I just bought the retracement. I liked that it had, again, signs of strength. off the bottom. It had done that retracement on lighter volume. It kind of held that level. It was actually the 50-day moving average is what it was sitting on.
Okay.
And it's got down that level a few different times. It held. I went ahead and bought it. I called Tom the other day. I bought it on a day when I was looking around at some of the other bigger companies, and
Yes.
they were making big moves, and that was kind of just sitting there. And I'm like, I'm going to go ahead. And it's one I liked anyways, and when I saw that there was some activity in the group as a whole, I went ahead and bought that. And so far, so
Sure.
good. I just wanted your opinion.
Yeah, look, you certainly timed this thing right. First, with regard to the $1.80, $1.80 happened to be the TAS market profile bottom of its box that formed out here back, looks like on January 20th and 23rd. So if someone was looking for a buy point, that certainly was a buy point. And the reason to be looking for a buy point, folks, is because of that breakout session that occurred on December 7th that had 13 million shares. And as price was pulling back into it, it was 1.7 million shares, 1.4, 600,000 shares, so it was just indicating that the selling had dried up. So now the question becomes, where is this thing headed to? With regard to horizontal levels of resistance, the only thing you're going to contend with is that swing point from December 9th, which has volume of 4.5 million shares. But, a couple days ago, it had 6 million shares as it was moving up into it. So it really looks like the top of that should get hit, 304. But are you looking at this as from a longer-term play because you've looked at the sector and the sector is strong?
It's a little bit of both. I have a big enough position. Part of it will be a trading position, and the other I'll probably just have as a core.
Yeah. Well, what's nice about this, short of this thing falling apart and gapping down below your entry point, it looks to me like you have, you've got a great trade here, because if this thing were to break below $1.80, it opens up the door to get all the way back down, maybe into these little swing point areas from back in March of 2016, down in the 65 cent range out there. I mean, it has a lot further before it could get down there. Not only just mean the price, other levels that it has to break, but it looks to me like you've got the ideal price to sit there and wait to see what happens as it approaches, that 304 type area. And if it's taken out with volume, you've got an A to B equals CD to the upside out there. Who's the leader of the pack inside the potash? Is it actual potash, POT? Is that the?
I want to say some of the stronger ones are Agrium, AGU, Mosaic, MOS.
Okay. Yeah.
CF is another good one. I mean, those are all kind of the top tier ones, I'd say.
Yeah. So Mosaic, I remember taking a look. So the nice thing about Mosaic, folks, is actually if you were somebody that was into buying breakouts of consolidation areas. Let me turn off these market profiles. This is what so you're using Mosaic maybe as a proxy as to what might happen in this sector here. The cool thing about the Mosaic chart is it was traveling in a sideways consolidation from about the price level of $30.94, so $31 at the top and $23 at the bottom. So you've got a nice, it's 23 to 31. You've got $8. So, and this thing has broken above it with a nice wide-ranging bar and volume back on January 24th. So all this is doing today is pulling back into a breakout area and the top of that consolidation with light volume. So it suggests that Mosaic, as long as it stays outside of the consolidation box, looks like this has a target of 39.04. So probably you should watch, Mosaic because of that pattern, along with Intrepid Potash out there.
I agree, Steve. Well, thank you very much. I always appreciate your help, and you're always a big help to you and Basil, Larry, everybody on. It's just a great group of people that we're very, very fortunate to have you guys out there every day helping us out. So I appreciate it.
Well, you're welcome, and we're very fortunate to have you out there helping us out. Because you are a master at finding these stocks that are breaking out. So congrats to you on this one as well.
All right, you take care. You have a wonderful weekend, and we'll talk soon. All right, take care.
You bet. You bet. That was Brent in Martinez, California. So, folks, watch this mosaic chart because this is I didn't realize that this thing had actually pulled back into the top of that consolidation with some light volume out there. So it looks pretty good. Now, we had one other request out here. Oh, it was for Caterpillar. So Scott wanted to take a look at Caterpillar out here. And I wanted to show this pattern. So Caterpillar, and we're starting now. Scott was looking at this from the longer term view. So when Scott sent me an email, he sent me a weekly chart. And what I like to do is if somebody sends me a weekly chart, I like to look at the above and below. So I want to see what's going on the daily chart, what's going on the monthly chart out here. And I'm glad that I did that because sometimes we don't pull the charts back far enough on the left-hand side. And in the case of Caterpillar, back here in February 2016, it actually formed a Gartley buy pattern. Yes, it did, folks. A nice Gartley buy pattern. So let's come back. Let's take a look at Caterpillar. Let's figure out what the monthly chart is saying, what the weekly chart is saying, what the daily chart is saying, and figure out where Caterpillar is headed to next. Steve Rhodes with TFNN. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we're taking a look at the Caterpillar out here. We're looking at the monthly chart, which has which did form back in early 2016, formed a nice little Gartley buy pattern. Now, Gartley buy patterns, Gartley sell patterns have 5 different outcomes. And if we take a look at this one, let's go see what outcome we're at right now. I'm just going to use the A to B equals CD level, and we can see we're outcome number 3. First one is 382 retracement of that A to B equals C. The second is the 0.618. The third is the 0.786 level. So the question really that Scott was asking, and it could be, is this now a Gartley sell pattern? And there is an A to B equals CD. Let's go take a look at that. So first, let's go ahead and get rid of the retracements out here. Here's the A to B equals CD that has a possibility. The A point now happens to be the January 1st, 2016 swing point low. The high is April 1st. The retracement just 1 month later into May, and we can see that we're above a 1-to-1 A to B equals CD, but there is no bearish reversal signal. On a monthly basis, you had the bullish reversal signal. So this suggests that price can go higher. No, I don't have all the extensions on here. I'm sorry, because I was just making a chart clean that I had sent to Scott. But in any event, let's go to the weekly chart, because I don't think that the move higher is done. And here's the reason why. If we take a look at this weekly chart now, and we look at each swing point, remember we were talking about swing points earlier, and when price moves into a swing point, we sure like to see it on individual stocks, because then we don't have to question what's going on with regard to the ETF structures out there. And so individual stocks are just simply buying and selling of that stock, right? And so as we take a look at the swing point from April 18th, it had volume of 33 million shares. When that level was passed, it was passed with 34 million shares. That confirmed that A to B equals CD to the upside. The next time we have a swing out here happens to be at the 0.618 retracement level, around at 89.87. That had volume of 21 million shares, passed with a wide-ranging bar and accelerated volume, 48 million shares. Now we're dealing with the current week. Well, the current week's swing point would be December 5th. 23 million shares. We are at 30 million shares right now. This has a series of A to B equals CD patterns to the upside. This says to me that Caterpillar is going to go ahead and head to its fourth outcome. The fourth outcome meaning the 111.46. So is this a Gartley sell pattern? It's not a candidate. It certainly is not a candidate yet when we take a look at what the weekly charts are suggesting. And Caterpillar could easily turn into that ultimate, which is that a Gartley buy or sell, in this case here, a Gartley buy turns into the ultimate A to B equals CD pattern, which would take Caterpillar all the way back to all-time highs out here, well, beyond all-time highs, would get you back into the 151 area. So you take this one step at a time. Of course, I did mention that I looked at the daily chart. So what's going on a daily chart for Caterpillar? Let's pull this back up. I believe it was moving higher with less relative energy. So if we take a look at what Caterpillar is doing on a daily basis out here, and I try to figure out, hey, where are we with regard to wave counts and so forth? Let me just try to figure out where we might be at. Oh, that's interesting. Makes a 7th wave move. There's the letter G. I don't make this stuff up, folks. Then it goes ahead and retraces. Now we're just going to simply start from where that retracement was, and you are in wave number 6 most likely. It's either 6 or let's figure it out from here too, right? Go up. So if you're going to take a look at wave counts, either 4 or 6 out there. But it is moving higher with less relative energy. And yesterday was a bearish reversal signal, but no follow through today. And price is trading above the Stevie's oscillator and change line. So it's suggesting a big breakout from back here in November. If there's a retracement, 92.70 ought to hold. So folks, thanks so much for being here. Stay tuned. Our favorite polar bear, Dave Boyd's going to be up next. Have a wonderful weekend, a fun Friday. Be safe, and we'll see you on Magnificent Magical Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.